Good morning, everybody. Welcome to the first show. The first show of the last show of the first quarter. The last show of this quarter. Sorry for the mess. When it's a live market open, I'm Yohay Elam of ForexCrunch.com. You're welcome to visit the site and also listen to Market Movers podcast. And this is for FX Street's morning show. It's the last day of the third quarter. And we have lots of developments. First of all, let's take a look at what's going on in markets. So, euro dollar is at 112.30 in range, basically up from yesterday, but didn't go too fast. It has support here at 112.15 and resistance at 112.90. Further resistance at 113.73 and support at 111.65. Pound dollar, the pound is being beaten. It just doesn't manage to rise, doesn't manage to go up. It's at 155.50, and there's still more to go towards the lower levels. It's a bit off the lows. They were at 151.30. Dollar yen, I think we talked about it many times in the past. We're at 120. The pair is basically hugging this level. We've seen lower levels yesterday because of more risk aversion, but now the mood is a bit improved. Dollar CAD, the sky's the limit. We've seen higher highs yesterday, just under 134.60, and we could reach even higher. We're seeing the pair settle above 134. 135 is a level to watch, and then 140, but basically just doesn't seem to find a limit on the top. On the downside, 134 support, followed by 133.25. Aussie dollar, the mood in markets has improved. We're seeing here this double bottom that we talked about yesterday, and it's at 69.35. But as the market mood improved, we're now hugging the 70 level, as we've seen quite a few times in the recent past. With the better mood, also the New Zealand dollar is climbing higher. 63.80. I still mark 63.10 as support. We'll go into more detail on the charts a bit later on. Welcome again. Questions are welcome if you would like to put some screenshots to have me refer to those screens, to those charts. You're welcome. So let's look at developments yesterday. We had bad figures from Germany. Germany fell back to deflation, fall of 0.2 in prices year over year. That was worse than 0% expected, and that's bad news, of course. Together with the poor figure in Spain, we're expecting today weaker than expected, let's put it this way, inflation figures. We'll have that quite soon. So this is the first bad figure from Germany. And then we had this morning retail sales drop. Germany also worse than expected, and unemployment up. In the middle, we had U.S. consumer confidence beating expectations with 103. We talked about this yesterday. When expectations are low, we can have a move to the upside. In Japan, overnight, we had disappointing figures, not because expectations were high, but the Japanese economy might be slipping back into recession, and this has implications. Perhaps more stimulus from the Bank of Japan at the end of October 30th. So retail sales were down, industrial output was revised lower, and also we had comments from Prime Minister Shinzo Abe talking about perhaps more action needed. And in Australia, we had Australian building approvals fall. But it's not only, as we know, it's not only data, it's also what's going on in stock markets. Recently, since the big crash in August, stock markets have a much bigger impact on currencies. So if Monday was a really bad day in stocks worldwide, we had the crash of Glencore in London and then in Hong Kong, and in general, this doom and gloom. Yesterday we had stabilization, and today we have even rises. Now, it's important to remember today is September 30th, the last day of the month and the quarter. And in some countries, it's also the end of the fiscal year. So we're going to see some last minute adjustments, and these could have big implications. So if, for instance, the Japanese yen strengthened a lot in Q3. We might see it weakening towards the end of the quarter because portfolios need to be readjusted. If you have to have a significant portion of your money of your portfolio in a specific currency, and this portion changed during the quarter, you have to readjust. And some scrambled to readjust at the last moment. Okay, so we had also, it was a bad quarter for stock markets. So it's not only a correction we're seeing today, but also last minute adjustments to readjust the portfolio. So we're seeing stock markets rise, at least now here in Europe. But after the fix is, after the month has ended, the quarter has ended, we might see the trend continue. If it's stocks, they might go down. If it's the yen, it might strengthen, and so forth and so forth. So it's important to remember this is a special day in this term, and we could see extreme moves. Another thing I have here on the screen, we talked about yesterday, the video made by Carl Icahn, the famous billionaire investor activist. Well, he had some good points about the stock markets, that they might fall, and that the Fed needs to raise rates. And but it still made a lot of noise. Another sort of bearish move that happened in markets, some negative feel, came from the IMF, the International Monetary Fund. They warned of the implications of rising rates. So basically, they don't want the Fed to raise rates because they say it could have a big damaging effect on emerging markets. We know that because money was so cheap for so long, many countries such as Vietnam, Malaysia, the Philippines, Bangladesh, companies there took loans in US dollars, and if the US interest rates rise, they might suffer. Okay, so this also, they tried to make things more gloomy, but it didn't really help. Let's go back to what I've prepared for you here on the screen. Talk about what's coming up today. So at 8:30 GMT, that's just in around 20 minutes from now, we have a final GDP from the UK and also current account. And then, more importantly, we have Eurozone inflation. So before we continue to the next events, let's just look at the economic calendar. This is the FX3 calendar hosted on FX and Forex Crunch. So UK current account, it's probably a bit more important than GDP because in revisions in UK GDP, it doesn't change too much. So the current account is expected to show a deficit of 22 billion pounds, a bit smaller, a bit better than the previous month. And GDP year over year is expected to be confirmed, 2.6. And quarter over quarter GDP is expected to be confirmed at a rise of 0.7%. All in all, no big changes are expected. The UK economy continues growing at a solid clip, and the components might change a bit, but I think the current account might have a bit more weight today than the final GDP, because contrary to the United States, where we have bigger visions, in the UK they are smaller ones. In any case, we talked about the falling pound, and as you can see, the fundamentals don't really agree with weaker pound because the economy there is doing quite well. Okay, and then we have Eurozone inflation data. That's at 9 GMT, just after the show ends. We also have figures from Italy. So official expectations, as you see here, stand on consumer price index, headline CPI, unchanged over the year, 0%. That's just down from, well, last month we had a rise of 0.1%. And core CPI, which is not impacted by oil prices and other volatile items, we have expectations for 0.9%. Now, I believe we'll have weaker figures than that. Why do I think so? Because it's we had in Germany weaker inflation data, and also in Spain. So at least on the headline CPI, and because of oil, because of other commodities, I believe we'll have deflation once again in the Eurozone, negative figures. And but the key question is not only the negative surprise in the headline CPI, but also core CPI. Do core prices, is it the general direction of the economy also looking lower? and expectations stand on a repeat of last month's number, 0.9, and that's quite of a wild card. Okay, before we move on, let's say good morning to Jake, and Jake has a question. Jake says, do you think there is substantial event risk for the NFP on Friday? What did you make of the HSBC report recently about dollar being bullish? Okay, so the first question is about event risk on Friday. Of course, I think there's an event risk on Friday. That's the non-farm payrolls. It's the most important indicator. It's the king of foreign exchange. So I think it's, of course, there's an event risk. Contrary to the previous month when we had it impact the Fed decision in September, this time the next important Fed decision is only in December. So we have a Fed decision at the end of October, but the more important one is in December because there's a press conference and also new forecast from the Fed. So I think we would need to have a bigger surprise than normal to really, really move markets. So if in previous months my NFP previews talked about above 250, it's always dollar positive, and under 200, it's always negative. This time I would widen the range, let's say, especially to the downside. We would need to have under 170,000 for it to be really dollar negative, and above 250,000 to be really dollar positive. So because there's still a lot of time and 2 more NFP reports until December. But nevertheless, it's non-farm payrolls, it's Friday, it moves markets. Don't worry, there's going to be lots of mess over there. And the second question from Jake is HSBC report recently about dollar being bullish. So I also republished this report on Forex Crunch. It's a very interesting note. I'm bearish personally on euro dollar, but I listened to their analyst today. He was on Bloomberg TV and explained their position, their contrarian position, because, well, it's not only me, it's most analysts in markets see euro dollar is bearish. And I think I do agree with what he said there on what happens after the Fed raises rates. So currently the dollar is stronger, as the dollar strengthened a lot because of rate hike expectations. And once it does come, once it comes in December, I believe, then we'll have a sort of buy the rumor, sell the fact event. I don't think once the Fed announces rates, the dollar will fall, but maybe a few weeks afterwards, when this will already be, markets will have already digested the move by the Fed and think what's next, and understand that the Fed is not going to raise rates so fast, so soon, that the markets will finally believe that it's going to be gradual. Then I think that the dollar could change course against all currencies. But that would take a few weeks or maybe a month. It also, of course, depends on the data and everything afterwards. So in that sense, I do agree with HSBC. But it's also important to remember that he also mentioned this analyst, his first name was Dominic, I can't remember his last name, sorry, that that the ECB doesn't have much scope for more QE. And here I think I disagree. I think that Draghi has shown in the past that he's ready to act, and I think he'll do it once again quite soon. So in this sense, I don't agree. Okay, we have more questions. Good morning, Borio. Do you see euro down for today? Well, it depends on the data. We'll continue covering more events. So if it depends on inflation, Borio, it's going to be negative for the euro. But if we have also the ADP report, and we're going to talk about that. So, and Jake, one more preview for the new quarter, 5 more most predictable currency pairs. Yes, that's an article I write every quarter, and I'm going to write it once again. So it's going to be published either today or tomorrow. Good morning, Cassius Key. Good morning. I wonder if you record personally macroeconomic data. I'm not sure I understand the question. Can you clarify? Anyway, go back to Borio's question and cover more events for today. So We have here, let's go back to the screen. Next, we have a speech after we have the inflation data at 9 GMT, just after the show. We have a speech by Bill Dudley. It's going to be his second time this week, and well, he speaks quite a lot. He's very centrist. He's the president of the New York Fed. I'm not sure it's going to see anything really new, but we have to take that into account. More importantly, at 12:15 GMT, and we have the ADP non-farm payrolls. Okay, that's the private sector figures for September, and a hint towards the non-farm payrolls. So this is a very important release. Even if the correlation between the actual non-farm payrolls, the private sector part of the non-farm payrolls, and ADP is not always clear. So let's look at what we're expecting. Last month we had 190,000. This time we're expecting 195,000. I hope everybody's sees the point on the screen. Of course, better than expected dollar positive, worse than expected dollar negative. And this is, of course, an important event. Later on, we have the Chicago PMI. It's a preliminary number for September. It's expected to tick down from 54.4 to 53. And we have Janet Yellen speaking at 7 GMT. So Janet Yellen rocked markets last week by being a bit more hawkish. This time it's an event about community banking, not about monetary policy. So I'm not sure she'll say anything meaningful, but she's, of course, one of the most powerful figures in foreign exchange. So we have to take note of that. Let's look at more questions that we have here. Question by Kevin. Are you bearish the FTSE 100? Well, I don't follow stock markets that closely. I do follow in general the direction because it does have an impact on stocks, but I'm not familiar really with the internals. I mean, I know a few names of companies. A lot depends on what central banks are going to do. That has the biggest impact on stock markets, more than the individual companies. Sometimes we do have individual companies like Glencore pulling all the FTSE down, or Volkswagen pulling all the German DAX down, but it depends more on central banks. That's what I can say. Another question from Cassius Key. Yes, I wonder if you keep the records of NFP countries' unemployment rate number, CPI, on an Excel fact sheet. No, I don't keep them on an Excel fact sheet because we have an excellent FX read calendar, and you can dig into the data well into the past, and you can see excellent charts. Let me put that calendar on the screen again. So for instance, for the ADP I just talked about, we have here a graph of previous figures. Can you see that? Surprises, of course, here's the big recession of 2008, 2009. And but do you think there's a reason I should put it in my own Excel sheet? Maybe there might be advantages to that, but I think these figures, also the historic table here, are very satisfactory. Okay. Let's go back to the events. We talked about the events for today, but until we have a session tomorrow, of course, we have more events during the night. Well, we have Chinese PMIs, purchasing managers indices from China. So it's not as important as we had last week, because this is, first of all, the official manufacturing PMI carries less weight because it's published by the government and not by an independent body, not by Caixin, not by market. So we're expecting, well, basically more of the same, a slight drop from 49.7 to 49.6. And non-manufacturing PMI, that means the services sector, was better, and it's above 50 points in growth territory, showing growth and not contraction. It'll probably be something similar. Then we have the independent Caixin manufacturing PMI, but this is the final figure. So we already got a heads up last week, and it was worse than expected, and it had a very negative impact on stock markets, on the Australian dollar. That's when the Aussie dollar hit the double bottom. And this time it's the final figure. So we might have a change here. but I'm not sure it'll impact markets so much like the first release. Okay, yet again, a fall under 47 points, if it gets even worse, it'll have a negative impact, but it has less weight than the first release. Okay, and afterwards in Europe, just before the show, we have manufacturing PMIs for the Eurozone, starting from Spain, which looks better, and then Italy, France, Germany, and the final manufacturing PMI for Europe. Okay, so it's not as important as the flash figures. For the preliminary figures always carry more weight. It's like GDP in the US or other things like that. But it's important to mention these things out. Okay, so let's look a bit more. Of course, thank you very much, everybody, for your questions. We'll take a look now a bit more at the charts. I know that let's start with the pound yen, because I know it's a favorite for so many of you. So we're seeing it on the move higher. Today it's at 182.15. It was at a low of 181.27. And yesterday it hit a low, it bounced off 181. So it hit a very round number yesterday, and then it began going up. I find support because of last week's low at 181.50, but a more important line to watch is 182.50 and then 183.50, and 184.35 was the peak seen last week. Now, if we look at the bigger picture on the daily chart here, then I tried to draw a trend line last week, and well, this trend line didn't work that well. I think we can safely delete it. Anyway, bigger trend that we have seen the pair fall from the highs, but the even bigger trend remains higher. In general, fundamentals support higher pound yen because in the United Kingdom we're expecting a rate hike, all right, and in Japan we're expecting more stimulus. And this is especially true if we go back to the 1 hour chart. This is especially true after we had weak figures from Japan, weak retail sales, weak industrial production, and talk about a new recession, talk about more stimulus, both from the Bank of Japan and from the Japanese government. So we've seen the pair being hit hard because the yen received some safe haven flows and the pound was beaten. But I think that, for instance, in a few minutes we'll have new figures from the UK regarding GDP, and that will be a reminder that the UK economy is actually growing and the Japanese one is not exactly doing the same. Any other pairs you would like to cover? Let's if we talked about the yen, let's talk about euro yen. This is a totally different picture. This pair is very stable. It's at the 134 handle for quite some time. Both currencies are safe haven currencies, so when things go wrong in markets, when stock markets fall, these currencies rise against the US dollar together. And when things get better, markets feel more confident, then both currency pairs slide against the US dollar. So against one another, they're very, very stable. Anyway, lines to look at are 135.40 and 134.20. Okay, euro pound. Here we have more exciting stuff. Not a lot of pips like pound yen, but still quite a lot of movements. We're above 74. The line I marked here is 74.07, which was a peak last week. But we can safely add here another line of the peak that we've seen yesterday, which is at 74.36. The downside of the current tight range is right here at 73.80. Okay, and further support below is at 73. Now looking up, of course, the most important line is 75 because it's a very round number. So these are the levels. Okay, we'll jump to New Zealand dollar. Hi Vikrant, thanks for joining us today. Let's talk about Kiwi dollar. So Kiwi dollar is moving up because the mood in markets is getting better. We have a 63.80 is the line I'm looking at, is the level that we have now. 64.25 is resistance, but I think we can also add this line, right? First of all, it's a round number of 64. Secondly, it has worked as resistance on Monday, worked as back then. So on the downside, I'm looking at 63.10. Maybe we had here 63.10 at support. We had a dip below that, but I see that as a false break. And here on the downside, we have 62.40 is an important line looking down. If we look at the bigger picture, of course, QE dollar is trending down. It did manage to stabilize in recent weeks. So we have it basically, the bigger picture is range trading between 62.40 and what's that, 64.40, so it's around 200 pips. So basically, if we look at the recent weeks, recent week or so in QE dollar, we have some range trading. Is it a change of course? I'm not so sure, because also if you look here, let me point out this these levels. So here, also here we had some range trading at a higher level. So we had this consolidation. If you wish, after the big fall, we had some bounce, but it was more of a dead cat bounce, trading in range, and then boom, we fell once again to lower levels. So yeah, daily chart shows a nice double bottom. We're talking about this level of 62.40, Vikrant. I guess you are. So we have, because we had this big fall here, I see it as a swing low, which is not significant because markets went crazy that day, and we had a very quick bounce back up. So I would look at the double bottom at 62.40. I guess that's what you're referring to. So yeah, so now we have range trading. We had previous range trading, and then we had the pair continue down. In general, I see the pair continuing down. Even it's a bit stronger than other commodity currencies in the sense that New Zealand exports dairy products and not copper and iron. It depends less on China. It depends more on people eating and drinking milk. So, but in general, it is the Reserve Bank of New Zealand is cutting interest rates, and the Federal Reserve is expected to hike. So I think there is more potential on the downside. All right, let's talk about other charts. And of course, I welcome more questions about currency pairs, fundamentals, anything Forex related. Euro Swiss. I find this very boring pair. We had lots of action in January, but we now it's a bit stuck. The Swiss franc is trading in tandem with the euro. A bit more interesting is dollar Swiss 97.35 at the moment, with keeping away from parity and away from 95. These are the levels to watch: 95.20, 96.60, and 98.40. Vikrant, you have another question. Could it retrace to previous range bottom? Back to the Kiwi dollar. Let's go back to this pair. Yeah, of course it can retrace to the previous range bottom, which is right here, more or less, right? It would be a breakout of the current range. Sorry, to reach 64.60. But sorry for that. So, but I believe that the general direction is down. I find it quite a nice pair to trade. I think it's sort of a more predictable one. And that's answering also the question by Jake earlier on. Okay, let's now jump back to the top. It's okay. It's 8:30 GMT. It's time for the release in the UK. Do we have fresh figures up on the screen? Yes. So no surprise from the quarterly figure. We had 0.7 rise in the UK gross domestic product in the second quarter, as expected, but we had bad news from the year-over-year figure. It actually rose only 2.4%, so this was a surprise. Current account, we still don't have it on the screen. Let's see if the British pound did react to, yeah, that's right. Jax are Wild. That's your name, Jax R. Wild. Thanks for pointing that out. Yes, we have, because of the weaker year-over-year figure, let's move to the 30-minute chart where you can see the reaction. Well, actually, pound dollar moved higher immediately before the release, went to 151.60, and now it's falling back down in range to 151.40. Let's see if it can push even lower because of this not so good GDP figure in the UK. Yeah, it's not as good as expected. I said there aren't many revisions. That's why perhaps markets were a bit sleepy towards this release, but now we have a bad figure. Well, it's somewhat balanced by a positive current account. Okay, so we have UK current account for Q2 actually surprised to the upside. So the deficit is smaller. UK current account deficit is only around 16 billion pounds and not 22. So that sort of balances out the modification in year-over-year GDP. Okay, so maybe that's why the movements are not that strong. Yeah, we have a reaction to the downside, but it's not extreme, at least at the moment. Okay. Another question from Cassius Key. Thank you for the answer. Useful tool, the charts, past numbers. Is well wonder on what is based your trading methodology. Are you going to make those webinars on a daily basis? Yeah, I on Forex Crunch and also on Market Movers podcast, which you're welcome to listen to. I focus on fundamentals. Fundamentals move markets for the long term. If you want to avoid too much noise and trade more on the bigger moves in the markets, trade for the long term, perhaps sleep better at night. What moves markets are fundamentals. If interest rates go up or go down, or GDP figures, employment figures, this is real stuff as I see it. Now, that's how I look at things. And for entry and exit points, technical levels are important because all the world looks at support and resistance lines at Fibonacci levels, double bottoms, shooting stars, moving averages. So if everybody is also looking at that, that can impact markets. Okay, so technicals are good for short term, for those trading only quick price action, which is not what I talk about. And if you do fundamental analysis and try to take the big moves, technical analysis could help you with sort of the fine-tuning, the entry and exit points, stop loss points. That's the methodology. And regarding your second question, yes, I'm going to do these webinars on a daily basis. This is a new show. We're still in testing and pilot mode. So any kind of feedback on anything, on the quality of the sound, on if you would like to see more charts, less charts, more fundamentals, less fundamentals, any feedback is of course very welcome, either directly to me or to Mauricio FX Street, who runs the show, or well, we have lots of places to put your commentary. And what else? Yeah, that's. I hope that answers the question. Want to look a bit more at other currency pairs, a bit more in depth on. Let's go back to euro dollar. Well, nothing happened here. All in all, we've seen this big jump last week to almost 113, falling back down towards 111. Now we're back up to the higher levels of the range, but the pair is still looking for direction. So HSBC, as one of you guys, as Jake asked before, sees more potential for the upside, but I still see some potential for the downside. Pound dollar, what we talked about just now, I think it has been beaten too much. And well, we talked about the reaction to the GDP. Now it's more or less erased. We're back to 150, 150. Dollar yen. Yeah, we tried to break out of the. Let's see if I can show it here. We had this triangle. Why doesn't it show up? Anyway, we had an attempt to break higher. The pair moved all the way to 121.20, but then fell back down. I think at one point, one time or the other, it's just gonna break. I believe to the upside because of more stimulus from the Bank of Japan. But anyway, it's really loves the 120 level. It's hugging it for quite some time. Anyway, 121.20 is on the upside, 121, 122 above that, and far above is 123.50. On the downside, we have 119.20, 118.30, 117. This is, of course, the crash back in August when stock markets crashed, this big fall to 116. Okay. Dollar CAD, I know many traders don't like this currency pair, but I think it's one of the best. So we had a high yesterday of 134.60. For dollar CAD, these are the highest levels since 2004, not 14, 11 years. And each time we have it moving a bit higher, settling higher, and then making another move. So the trend, I think, is quite consistent. We had a fall last week to nearly 130. And from there, we had a big bounce. 130 provides support. But I think the trend is higher with 135 and 140 as the next levels. Another question from Jake. Show feedback looks like you're in a locker room or something. Maybe FX Rate can invest in a backdrop. Thanks, Jake. Well, I'll try to rearrange the background behind me. Let's put it once again here. No, I'm not in a locker room. I'm from my home office, and we have a closet behind me and some books. But yeah, I'll try to rearrange the background. Thanks for the feedback. Let's move back to the screen. Good morning, Sebastian. What's your goal on dollar yen? I don't think it'll. Let's put back dollar yen and maybe put the daily chart. Okay. Thanks for the question, Sebastian. So, well, we had the pair rising above 125 earlier this year. Some analysts are talking about 125, 130, 140. Some are talking about a crash to 110. I don't think we'll have extreme moves, but I think it will go up to around 125 towards the end of the year, which is exactly 3 months away from now. Target, if more QE, think it can go up to 130 before New Year? No, I think 125 will be good enough because of the global gloom in markets, because of this atmosphere that China is slowing down, stock markets are going down. And of course, today is a positive day, but in general, there's a worse mood than we had a few months ago. I believe that this will limit any gains of dollar yen because the yen is a safe haven currency and money is repatriated into Japan in times of trouble. So that's why I think 130 is a bit too far at this moment. Okay. Yeah, we talked about Aussie dollar. Okay. The next currency pair. Thank you very much, everybody, for all your questions. I really appreciate it, and I'm happy to answer them, of course. Let's cover Aussie dollar and take perhaps more questions and then wrap up. So if I talked about hugging in dollar yen, also here we have hugging of 70, but we have a double bottom, which is also evident on the daily chart, and also, of course, even clearer on the hourly chart right here. 69.35. I think it can go even lower. On the top side, we have 70.60 and 72. After the Fed, we had 72.70, but that's right here. But I don't think it can recapture these levels. For the next 24 hours, the Chinese figures are in play for Aussie dollar. Okay, so do you have any more questions? Well, you're welcome, Sebastian. Happy to help. Or let's look back at the presentation I've very short one. And okay, question from Jax R. Wild. Quiet session so far. Wonder why GDP and unemployment figures. Waiting for your CPI. Yeah, I certainly agree. GDP figures in the UK were not very surprising. I mean, we had a positive surprise on the current account, but a negative surprise on the current account. The big event for this European session is the CPI in Europe. So and then the ADP in the United States. And it's also the end of the month. I believe we'll have much more action, especially towards the London fix. That's 3 p.m. GMT. Okay. The negative. Okay, let's. It's time to to wrap up. So this is the live market open wrap up of September 30th, the last day of Q3. I'm Yohay Elam of Forex Crunch and Market Movers podcast for FX Street. It's the last day of the month, meaning we can see lots of movements in the last moment to readjust portfolios. So please trade with less leverage. In terms of data that we had so far, the recent developments are bad news from Germany. First of all, they fell into deflation yesterday, 0.2% year over year. Then we had retail sales dropping and disappointing, and unemployment moving up. This didn't have a strong effect on the euro, just a bit. We're waiting for inflation figures. In the US, we had a positive consumer confidence figure. In Japan, we had worse figures from retail sales, industrial output, and there are more fears of recession, more expectations for action from the Bank of Japan. In Australia, building approvals fell, but Chinese data has more impact. Okay. What are we looking for in terms of mood in markets? First of all, things are looking better. We're seeing some stabilization in stocks even going up after the big crash, including automobiles, including Glencore and mining stocks. But analysts say the Chinese stocks are highly valued and they can fall even more. So we have a day of correction, but it may be also related to the last day of the quarter, and we can see things falling. This, of course, has impact on the euro and the yen. When things go sour, when things are wrong, when markets fall, euro and yen rise, the rest fall. And when we have better mood, a risk-on mood, we have commodity currencies rising and euro and yen sliding. Also, we had dark clouds from the IMF and from Carl Icahn warning about what's next. Today, looking forward, we have figures from the UK more or less balance each other. At 9 GMT, just after the show, we have Eurozone inflation, which is very important. That we're expecting the Eurozone to fall back into deflation because of the hints we already had from Germany and Spain. This could mean more action from the ECB in the future, but especially we have to look at core inflation. At 12:15 GMT, we have the ADP non-farm payrolls, a big hint towards Friday's all-important event. We're expecting more of the same, gain of 195,000. Right here, GDP. Anyway, at 7, Yellen, Janet Yellen talks. For tomorrow, we have Chinese PMIs and Eurozone PMIs before the show, and it's the first day of the month, the first day of the quarter, and we could have a lot of action. Looking at the charts, euro dollar is sort of well anchored within the range at 112.20. It's within a narrower range than the wider 111, 113 range, waiting for the CPI. Pound dollar now is on the move higher. Probably it likes the current account more than the slide in GDP. In general, the pound has been beaten, I think, too much. Dollar yen hugging the 120 level once again, now rising a bit higher. We have a positive mood in markets, which means the weaker yen, stronger pound in this case, and dollar. And yen is still looking for direction. Dollar CAD settling above 134. Will we see new highs today? Maybe we're seeing new highs almost on a daily basis. Aussie dollar reached that double bottom at 69.35 and now moving a bit higher on the positive mood in markets, but 70 is still a magnet. and Kiwi dollar also moving higher, moving towards resistance at 64. So these are the markets for today. Before we sign off, let's see, we have a few more last questions. Sebastian, when do you think we'll see more action from the ECB? That's October 30th. And that's the date sort of for Halloween surprise. The Bank of Japan might act, but it's also to watch what the government says, what Shinzo Abe, Prime Minister, and his colleagues in the government say, because the government is also talking about stimulus. Jack Sarwild asks what is the current mood, and whose mood is it? Well, I'm talking about the mood in stock markets. So we have good days when stock markets go up, and we have bad days when stock markets go down. Current mood is positive. Stock markets in Europe are going up. In Asia, they were okay. And this came after we had big falls, especially on Monday, and also yesterday was sort of a mediocre day. And Jake asks, why is euro more a safe haven than the US dollar? Well, that's because of the negative deposit rate that the ECB enacted since June 2014 and the QE. I'll talk about that more in detail in the webinar I'm holding for FX Rate tomorrow afternoon. So, but that's sort of the main reason, and don't have time to get into that more in depth. But okay, so thank you very much, everybody, for coming. I'm very glad to have your questions. Very glad to receive any kind of feedback, positive, negative questions in general. So everybody, I wish you guys safe trading, happy trading day. Remember, it's the last day of the quarter, and we'll be here tomorrow. So thank you very much, and goodbye.